stop everything you're doing and look at your screen right now. As you're watching this, Bitcoin is not just moving. It's telling a story of immense pressure and potential. And whether you are holding, trading, or just watching from the sidelines, what happens in the next few hours could define the market for the rest of the year. I want you to think about your own position, your own portfolio, and I want you to leave a comment down below right now telling me what you think happens next. Does this hold, or do we see a flush? Because what we are witnessing is not just a simple price drop. It is a fundamental test of the entire crypto ecosystem's resilience. And to understand where we might be going, you need to understand the terrifying and beautiful mechanics happening beneath the surface of this seemingly simple number, $93,019.78. That number right there is a battlefield on the surface. The headline is straightforward and to some, perhaps even bearish. Bitcoin surpassed 93,000 USDT, but is still down 1.2% in 24 hours. The casual observer might see a dip and panic, but the informed among us, you and I, we see something else entirely. We see a market squeezing itself into a corner, preparing for a violent and decisive move. Let's break down why the specific price point at this specific time is so critically important. First, consider the context of the climb. Bitcoin didn't just stumble into this price zone. It has been on a monumental rally for months, shattering psychological barrier after psychological barrier. Every single time it broke through a round number, 70,000, 80,000, 90,000, it did so on a wave of institutional adoption, with new ETFs seeing record inflows and major corporations adding Bitcoin to their treasury reserves as a legitimate asset class. This isn't the Wild West of 2017 anymore. This is a new financial system being built in real time, and Bitcoin is its cornerstone. But all rallies must breathe, and all markets must consolidate. The fact that we are seeing a slight decrease of just 1.2% after such a staggering ascent is not a sign of weakness. It is a staggering display of strength. It tells us that the selling pressure at this all-time high level is being met when almost equal, ferocious buying pressure from those who believe the journey is far from over. This is a tug of war between profit takers and momentum riders, and the rope is barely moving. Now, let's talk about liquidity. The trading volumes accompanying this move are not just high, they are structurally different. We are seeing a massive volume of block trades happening off the public order books through over-the-counter desks, which is a clear signal that large institutions are actively accumulating or redistributing positions without wanting to cause major slippage on public exchanges. This is a game of whales, and they are playing it quietly in the deep water while we watch the surface waves. Furthermore, the funding rates across major perpetual swap markets have remained surprisingly stable, not entering the excessively high positive territory that typically precedes a sharp long squeeze. This indicates that this move is being driven more by spot market accumulation than by leverage speculation, which provides a much healthier and more sustainable foundation for the next leg up. The volatility compression we are seeing is like a spring being coiled. The energy building up within a narrowing price range is immense, and when it finally releases, the move will be explosive. And we cannot ignore the macroeconomic backdrop, the global shift in monetary policy, with central banks around the world beginning to cut interest rates in the face of slowing economic growth, has created a perfect storm for hard assets like Bitcoin. When the yield on traditional safe haven assets like government bonds falls, the opportunity cost of holding a non-yielding asset like Bitcoin diminishes significantly. This isn't just speculation. This is a fundamental re-rating of Bitcoin's value proposition in a world flush with liquidity, but scarce on true, decentralized stores of value. The narrative has irrevocably shifted from digital gold to the global collateral asset, and what we are seeing at $93,000 is the market slowly, painfully, and methodically pricing in that new reality. This is a battle for the next $1 trillion of market capitalization, and every single dollar of this price is a soldier on the front line. So, as you watch this price, understand that you're not just looking at chart. You're looking at a live, multi-trillion-dollar consensus mechanism in action, determining the true value of digital scarcity for the entire world. Now, I need you to be part of this conversation. I want you to go down into the comments section and tell me your conviction level. Are you buying this dip, or are you waiting for a deeper correction? Your insight is data, and right now, we need all the data we can get. So we've established that this price of 93,000 is a battleground, a tense and volatile stalemate between immense forces of fear and greed. But the real question, the only question that matters now, is what comes next. The coiled spring has to unwind, the energy has to be released, and the direction of that breakout will be determined by a set of underlying on-chain metrics and market microstructures that most people never see. Data points that tell a far more nuanced story than a simple green or red candle ever could. Let's pull back the curtain on this second act. If you look at the exchange net flow data, which tracks the movement of Bitcoin onto and off of centralized exchanges, we are witnessing a consistent and powerful trend of withdrawal. This isn't just a trickle. It's a flood of coins moving from hot wallets, which are used for active trading, into cold storage, which is used for long-term, diamond-handed holding. This mass migration of coins off exchanges is a profoundly bullish signal because it indicates a collective decision by a huge swath of the market to not sell at these prices. It means the available supply of Bitcoin that can be easily sold on the open market is actively shrinking, and in a market driven by supply and demand, a shrinking supply against steady or increasing demand creates one thing and one thing only: upward price pressure. This is a silent, behind-the-scenes vote of confidence that often precedes a major price appreciation. Now, let's layer on another critical piece of data: the activity of long-term holders. These are the entities, both individuals and institutions, who have held their coins for at least 155 days. Historically, the spending behavior of this cohort is the single most reliable indicator of major market tops and bottoms. Right now, despite prices sitting at what many would consider a tempting profit-taking zone, these long-term holders are not selling. In fact, their collective holdings are near an all-time high. They are, in the parlance of the market, hodling. This is crucial because it means the most experienced and conviction-driven segment of the Bitcoin market believes the best is yet to come, that we are still in the early to middle stages of a macro bull cycle, not approaching its euphoric end. Their diamond hands are removing a massive amount of potential sell-side liquidity from the market, making it exponentially easier for the price to move upwards with less capital required. But let's not ignore the potential pitfalls. Let's talk about the resistance overhead. While we have broken through the 93,000 mark, the path to 100,000 is not a vacuum. There are significant clusters of sell orders sitting between $95,000 and $98,000, placed there by both earlier buyers looking to exit at a round, psychologically significant number, and by short-term traders looking to scalp a profit from what they assume will be a rejection at that legendary level. This is what creates the chop, the volatility, the 2 steps forward, 1 step back dance that we are likely to see in the coming days. However, the key differentiator this time is the nature of the buyers. We are no longer reliant solely on retail FOMO. The institutional bid is now a permanent and powerful feature of the landscape. Every dip is being bought not by a guy in his basement, but by a multi-billion-dollar asset manager executing a dollar-cost averaging strategy for a new spot Bitcoin ETF. This creates a floor, a level of support that simply did not exist in previous cycles. The 1.2% decrease isn't a failure to rally. It's the market pausing to absorb this overhead supply, to shake out the weak hands who are terrified by a little bit of red on their screen, and consolidate its strength with final push. The narrative is converging. The fundamentals are stronger than ever, and the technical setup is a powder keg waiting for a spark. That spark could be a major corporate announcement, a regulatory clarification from a key government, or simply the relentless, grinding pressure of constant institutional accumulation. The stage is set for a historic moment, a true price discovery event the likes of which we have never seen before. So, as we stand on this precipice, I have one final question for you, and your answer is more important now than ever before. I want you to look at your screen, look at that price, and then go down into the comments and finish the sentence. When Bitcoin hits 100,000, I will... Tell me your plan, because this isn't just a number. It's a threshold into a new financial future, and you need to decide right now what your role in that future will be.